By doing something for the neglected people of the society, human qualities evolve in every human being. Millions of people in various parts of the world are submerged in one problem or another each day.
And on this Giving Tuesday, we want to honor the global movement promoting charity and generosity since 2012. Even though the holidays look a little different this year, there are still so many ways to help out.
Let's Build Our Country Fund, LBOCF. It is the brainchild of a group of professional women that include company executives, medical doctors, and businesswomen led by Penny Mpanza. They are providing bursaries to 250 Gauteng matriculants from impoverished backgrounds to gain access to tertiary education.
Along, how the NGO companies look at their fund? Oh, for fund charity, the company has their own method which is called fund accounting. Oh, can you explain to me about fund accounting? Of course. Okay, let's see.
What is fund balance and why is it important?
Fund balance is like a savings account in a fund. I'll give you an example. Let's say we took in $10 of revenue during the year and we spent $9 of that 10. Then the fund balance at year end would be $1.
Fund balance is equity within a fund. The formula of fund balance is fund asset minus fund liability, or asset minus claim against asset. Fund balance also be known as net asset, capital, or net worth.
There are three types of fund accounting, which are governmental fund, proprietary fund, and fiduciary fund. Governmental fund is a grouping used in accounting for activities related to serving public. Within the category of governmental funds, there are five types, which are general fund, special revenue fund, debt service fund, capital project fund, and permanent funds. Next, proprietary fund are one of the government's most business-like activities. As the government prepares its financial account, it treats each enterprise fund separately. The fiduciary fund is used to account for resources held by the government as a trustee or agent on behalf of an outside entity that cannot be used to fund the government's own activities. For instance, the Fireman's Pension Fund. Advantage of fund accounting. First, it separates specific purpose fund from general purpose fund. Second, the segregation of the funds according to the intent of the fund provided by the law. Disadvantage. First, fund accounting does not offer a quality review to the government agency. Second, it is challenging to divide the balance from the general fund into a special purpose fund.
Move on to characteristics of fund accounting. Fund accounting can be divided into two, which are restricted fund and unrestricted fund. Restricted funds are funds that held on the specific purpose. The donor may be declared the specific trust during making the gift or may result from the terms of appeal for funds. Types of restricted fund: income fund and endowment fund. Restricted income funds are to be spent or applied within a reasonable period for their receipt to further a specific purpose of charity, which is further or more but not all the charitable purpose. Restricted endowment fund can be divided into two. First, permanent. The trustee do not have power to convert the capital into income. Second, expendable. The trustee have a power to convert all or part of funds into income. We move to unrestricted income fund. Unrestricted income funds are funds that can be spent or applied at restriction of trustee for the purpose of charity. It also can be used to supplement expenditure of project from restricted funds.
Moving on to the limitation of fund accounting, the first that we have identified that it is very high cost and will increase complexity of the financial statements produced. Costs that are related to identifying and valuing existing assets, developing accounting policies, establishing accounting systems, including the purchase of software and pilot testing them, developing necessary skills and providing financial information training for preparers and users. It also gives complexity that requires greater professional judgment for both the preparers and the auditors of government accounts. Comparatively, cash-based accounting is simpler and more objective. Next is the risk associated with adopting IPSAS. The way accounting standards might be applied can lead to a number of potential risks which could seriously undermine the validity of the financial reports that are produced. IPSAS could be applied with no real understanding of the issues and that are raised or the general accounting principles of IPSAS might not be properly addressed. Risks associated with budgeting process is in the public sector. The budget is often seen as a key document as it determines the allocation of resources between the public and private sectors, determines fiscal policies and distribution of taxation burden, allocates public resources between different expenditure programs, and may also provide the legal authority for expenditure. Other associated risk is in terms of political pressure that may cause decisions to be made about the accounting treatment of transactions in order to remove or minimize political criticism. The problem is accentuated as the dividing line between public sector and the private sector transactions becomes increasingly blurred. The principles-based approach leaves too much uncontrollable discretion to governments, which external auditor may be unable to prevent occurring, for which the parliamentary process provides an inadequate check. And financial statements may be less readily understood than those prepared on the cash basis. Therefore, it is important that the user has solid grounding in principle of assets, liabilities, income, and expenditure. As for the current strategies, Accountant General Department has established two committees, which are Government Accounting Standards Advisory Committee and Accrual Accounting Steering Committee. GASAC is functioned to oversee, confirm, and approve the development, adoption, and implementation of MPSAS. As for ACSC, they are responsible for approving the MPSAS that have been deliberated and endorsed at GASAC meetings.
Okay, moving on to the issues in fund accounting. So there are two issues in fund accounting. So the first issue is unnecessary degree of spending, and the second issue is fund accounting still relevant? Okay, for the first issue is the justification is the spending of funds is for the right reasons but at an inappropriate extent. So this issue relates to the utilization of fixed asset. The use of the principle of cash-based accounting, which does not see the purchase of fixed assets as the acquisition of assets. However, it is viewed as the outflow of cash funds incurred by the acquisition of fixed assets. So next issue, which is the second issue, is fund accounting still relevant? So fund accounting is still relevant in terms of legal requirements and financial procedures according to various acts. There is no rules and procedures for the specific accounting basis to be used for the presentation of fund financial statements, as stated in these constitutions and act. Next, as stated by Malaysian Public Sector Accounting Standard 1 Emphasis 1 of the federal government's accrual accounting, fund accounting is still found relevant, where the presentation for the summary balances of trust accounts is shown in the statement of changes in net assets or equity. So according to para 118 of the exposure draft 1/2012 for Emphasis 1, it states that an entity shall present a statement of changes in net assets/equity, also known as consolidated fund, showing on the face of the annual financial statements under the title name known as Summary of Trust Accounts Balances. Okay, next we move on to the recommendation for this issue. So for the first issue is to avoid comparing the budgeted cash inflows and outflows with the actual inflows and the outflows of the expenditure. Next is start using revenues and expenditures. Implementation of corporate financial reporting would reduce expenditures in financial reporting of companies where the outflow of funds would be recognized as the purchase of assets that would be later depreciated. The next recommendation is presentation of accrual-based fund financial statements of trust accounts. In particular, should be in line with MPSAS or IPSAS application. This is to provide a clear and increase the comprehensibility of the information produced. The final recommendation is examine figures in receipts and payments account of trust accounts from cash basis to an accrual basis for fund-based financial statements. This is to ensure changes are made to the trust deed in relation to changes in accounting basis.
To conclude our presentation, the public sector reforms have started decades ago with the aim to ensure the effectiveness, efficiency and transparency of operational and financial management in public sector. As they are migrating towards accrual accounting under the reforms, it will put the Malaysia public sector finance practices in line with other developed countries. The targets are to support the sustainability of fiscal policies and accountability of the result. In addition, as what Allah Subhanahu wa Ta'ala has mentioned repeatedly in Quran, the warns and the reminders that one day we shall be standing in front of Allah for our accountability. Thus, we have to fear Allah and let every soul consider what it has forwarded to the day of judgment, and fear Allah because Allah is aware of what we are doing. I think that is all from us. Thank you.